Hey folks, this week we're going to talk about how to choose the right mortgage lender. So, welcome back. This week we are going to talk about how to pick the right lender in terms of cost, service, and so forth. So, I get this question a lot. We handle so many folks, or we help so many folks buy homes that most of them do end up getting a mortgage on the house, and they need help figuring out who should I pick. And of course, in the end, price is king, and what's your house payment going to be? But to do that, it's not always about. I ask my agents, like new agents, when I'm training them, I'll say, hey, what's a better mortgage rate, 2.5% or 3%? And they'll always say 2.5%, but that's an incomplete information. You don't know enough information to pick the right lender based on just that, because there's this little thing called closing costs that they will charge you as well. So, if you get a 2.75% rate right now, which is possible, here in the middle of July of 2020, you could be comparing that to a 3% rate. But if the 3% rate has, $3,000 in closing costs from the lender versus $7,000 closing costs, from the lower rate lender. So the thing is when I help people shop for a mortgage, number one, I encourage them to use a local lender if possible, because local lenders have skin in the game. They're there. They know the market. They in general are going to have better service than these national lenders. I bank at Bank of America, but using them for a mortgage, I've never had a good experience with that. That said, what I'll tell people to do is tell the lender, the two lenders, hey, here's the sales price of my house. Here's how much I'm going to put down. Tell me what my monthly payment will be. And even then, a monthly payment is made up usually of 5 parts: principal, interest, taxes, your homeowner's insurance, and then PMI or mortgage insurance if you don't put 20% down. So what I'll then do is I'll compare just the principal and interest portion of that, because the rest of the stuff isn't going to change no matter what lender you use. Your homeowner's insurance, you shop for that. Your property taxes are going to be what they're going to be. If a lender estimates your property taxes lower than another lender, the payment might look cheaper, but it really won't be because of that anyway. So there's that. As I mentioned earlier in this broadcast, we help hundreds of buyers every year buy homes. And so we know the good lenders and we know the crappy lenders. And so a good agent will help you navigate that process as well. And so often right now, especially, lenders are so busy with the refinances, and the market is so hot right here in Columbia that they are overwhelmed, and a lot of them aren't doing a good job. And so we're seeing a lot of our closings being delayed because these lenders aren't used to, at least the not good ones anyway, aren't used to this amount of volume, and so they're not doing a good job. And therefore that costs money to you as a buyer. When you go to move in your house and you can't move in because the loan is late, then you've got to get the hotel and the move off the movers and all these other things. Anyway, those are a few things to consider when picking a lender and an actual mortgage product. There, of course, are several different types of loans, and we'll go into that in another broadcast. But if we can help you in any way, navigate that process or the whole home buying process at all, we'd love to help you too. So call us or DM us. Our information is on this email, and have a great week.